Hello everyone and welcome for today's session. From today we will start our finance specialization subject stock exchange and portfolio management. It is also known as SEPM. The subject we have to learn in 2 semesters, SEM 5 and SEM 6. The course content of SEM 5 is mainly concerned with security analysis part, while the course content of SEM 6 mainly concerned with portfolio management part. So, in SEM 5th, we have to learn total 3 chapters. Chapter number 1, Introduction to Capital Market. It mainly covers the structure of Indian capital market, its importance for our economy, and the recent trends and reforms take place in capital market. Then primary market, meaning various type of issues in primary market, functions of primary market, IPO and book building process, and foreign capital issuance process. Then secondary market, various secondary market, NSE BSE OTCEI, stock indices, and difference between primary and secondary market. Then chapter 2 mainly concern with the operation in secondary market in stock market. It includes various classification of securities in different groups, the types of order that we place in share market for buying and selling of shares, basic types of transaction took place in secondary market, the settlement procedure of secondary market, and various terminologies. Then brief about merchant banking and listing procedures of shares prescribed by SEBI. Then Demat services, depository process, its advantages and limitation. Then credit rating system. Then mutual funds, its various types, benefits and risk of mutual fund. Then comes chapter number 3, Introduction of Derivative Market. It is mainly concerned with the derivative products, their meaning, the growth of derivative market in India, and products of derivative market, forward, future, option, leaps and swaps, the various type of traders in market, and standardization of this derivative contract. So that is all about course content of this semester. Before starting chapter number 1, some important words that we need to learn, and these words are useful throughout SEM 5 and 6. We need to deal with those words frequently. So let us understand what they are. Firstly, it is stock. Stock is also known as shares and securities. In terms of share market, when we talk about shares, stock and security, it mainly concerns with equity shares or owner's capital. But it doesn't mean that it only related with equity shares. It covers equity shares as well as preference shares and debentures also. But majority time it deals with equity shares, owner's capital. So the stocks are nothing but they are the instrument through which company can raise their capital, can raise capital or debt for their financial requirement. So if any company wants some finance, they can issue the capital or debt instrument and take finance from the public, is called as stock. The second word is exchange. It is a place where continuous buying and selling of security take place. Generally, the existing securities are only traded in stock exchange. Exchange is also known as stock exchange. So if a person is having some securities, he has invested in some company's shares and if he wants to sell those shares, at the time he need to go to exchange. Exchange is a place where he can sell or he can buy furthermore securities. It is also known as security market. The next word is portfolio. A portfolio is nothing but a bunch of securities held together for an investment by an individual or group of individual or a corporate body is known as portfolio. If a person is having 1 lakh rupees and if he invests this 1 lakh rupees in different 10 companies shares, he buy shares of different 10 companies, then combinedly this is called as portfolio. And then comes portfolio management. When I have invested in various companies, the prices in stock market are dynamic in nature. They keeps on changing at every seconds, and this changes will either bring profit or loss for my portfolio. So in portfolio management, I want to secure maximum return and I want to reduce my risk. So portfolio management is a process of securing maximum return at given level of risk or securing minimum risk at a given level of return. If I have targeted some return, then I try to minimize my risk, but my return I do not want to minimize, or at certain amount of return I want to minimize my risk. That is called as portfolio management process. In portfolio management, we came to know about two more words, that is risk and return. So what is risk? It is basically some uncertainty or variability about return from our investment or capital appreciation or loss of both. When I invest in share market, say for example, if a person has invested 1 lakh rupees in share market, he also wants that this 1 lakh rupees will become 1,40,000 after a year, as well as the company, whatever interest or dividend declared by company, he will get the benefit of that. So the dividend the person is receiving is his return, and his total share value increases is called his capital appreciation. If any uncertainty or variability in this return and capital appreciation or both is considered as risk in stock market. And then comes return. Return is the amount an investor wants to receive over a period of time for a specific investment. If a person has invested certain amount, then he expect that the amount increases over a period of time, and when he disinvest that, then in return he will get some benefit, some profit. That is called as return. Say for example, if a person has invested 1 lakh rupees, then he expect that after 1 year this 1 lakh rupees becomes 1,40,000. So a person is expecting 40,000 rupees as a return. So that is all about today. Stay tuned for more updates. Have a nice day. Goodbye.